Hello guys, thanks for tuning back into Crypto Mainly. My name's Lee, as you know. Just a quick video update for you guys. I'm a bit frustrated myself, really. Just fell into the trap, listened to the news. Kind of expected the US Iran problem to be escalating today. There's so many warnings out yesterday about citizens protecting themselves in different parts of the Middle East and what have you. And it just seemed like it was going to escalate. So prices were breaking down, and rather than I sort of had a bit of a knee-jerk reaction, which is, you just need to control your emotions in this market, and it's easier said than done. I wish I'd had a look at the chart, because obviously it's quite clear to see what's going on here. Once it had broken the neckline, to be fair, last night, I just made a bit of a mistake, really, to be honest with you, in terms of, exiting the market like I did. No need to really do that at that point. I wish I'd have sort of had took a minute to take a breather and have a look at the chart, but, once we'd kind of broken down below, this sort of neckline here. So let's just show you that. So once we've broken down here, I didn't really look at the chart. I should have looked at the chart. You could clearly see, that that neckline wouldn't have mattered that, as much when you can look at where the support lines are. So yeah, a little bit disappointed in myself, guys. No one's perfect, and trading is what it is. You got to make decisions and stick by them, and that's what I did, and move on from it. There's hundreds of thousands of opportunities coming our way. It looks good at the moment. If you look at this, is a 4-hour chart, guys. You can see. Just want to show you a couple of things. You see on the price tags there, you've got the two blue ones, 102. So 102,600 and 104,400 are the two blue lines, blue prices marked there, and those are the blue dotted lines here. And that's actually, if you go to a weekly time frame, you can see that you can see those levels. So one here and one here. Okay, so you can see those levels there and there. Okay, so you can see yesterday, obviously, what with the move, the price has broken back up above both of those blue resistances, weekly resistances. So it'll be interesting to see how the week closes. We're looking obviously for it to close above 104,400 for things to be for things for potentially continuation. If we go to the daily time frame as well, that also looks quite good. You've got the price breaking above a couple of these green prices here. So 104,800 and 104,950 are these two green lines here. So you've got the resistance level there, and the resistance here, albeit this one isn't as significant, but I've marked it anyway, because you can see actually prices breaking above and coming down and finding support now, having broken out from there. So obviously what we're looking for is a support to hold with those the green dailies. I'll be interested to see where where today closes at the end of the day. Just show you a couple of things which I think are interesting. The main price we're looking for is the orange line there, 106,530. So what we're looking for is the price to break out above. We're looking for the price to actually sort of consolidate, break above. If it does, it will likely come back down anyway, and still before it actually takes off. So I think we've got a couple of options. Either this one, you can see I've marked on here, the 4th of July. Okay, that is traditionally a kind of a bottoming window for the traditional markets. There's sort of holiday periods and things coming. Obviously, you've got the 4th of July, and then obviously after that, you then tend to get the moves after the 4th of July. So you're going to see one of these two options. I actually think it's probably the one where it comes down rather than up. But of course, looking at the chart, reading what it says, it's looking like the price is broken above some key supports, weeklies and dailies, provided that today closes above 105. Okay, so 105,000. If today closes above 105,000, it's there's a good chance that you're going to get the continuation upwards rather than downwards. If you just look at the daily again, see where. So yeah, you can see a huge spike yesterday, which took us all above both the weekly resistances and that daily resistance. So it's looking quite good. You can also see I've marked off this 106,500, and it actually you've got a left shoulder around around these areas where you've also got a sign of resistance at that 106. So there's quite a we're coming up against quite a big resistance area here. So it's going to take a bit of strength to get above there. So, has Bitcoin got the strength now after such a big move? Probably not. I think, obviously, if you look at this, we're looking at highs. If I just show you, obviously, we've got, here, high, lower, my laptop, sorry, high, lower, high. Then you've got, so you've got high, low, lower, high, lower, low, lower, high, lower, low. Okay. Then broken out. Okay. And obviously, we've got a nice move here. We're kind of almost bouncing along this trend line as we come down, which makes sense. But again, you've got high, you've got low, you've got lower high and lower low, and you've got a lower high again. So, this again is, a continued downtrend. Okay, based on, similar to what we had here. So just have a quick look. Let's take that off. One of the things which I am considering is that it may be that this move is actually complete, in that we've got a big run up, and then obviously we came to the peak, and now we've got the corrective move. So this actually, if we measure this from top to bottom there, you can actually see that this could actually just be an ABC correction, in which case, ABC, and this move could actually be complete, and we could actually just get the continuation to the upside from here. So, I'm sorry, being a little bit unclear. I'm not really sure. It's very difficult to read the market as it is with, with Trump and the, the war situation and everything, and the market's moving quite violently based off sort of news events and things. But I just really wanted to show you a couple of things as well, guys. So going back to the 4th of July thing, if we go back through time, you'll see on here, make sure that's in the log scale. Yeah, so if we go back through time, you'll see what I mean. It's not perfect. Nothing's perfect in trading, as I'm sure you'll know, but you can see that, that the 4th of July historically does, come in or around market bottoms. So this one's a bit of an exception here. This one is a bit of an exception here, but if you go back prior to that, you can see, obviously, 2022, in or around the market lows in July. The year prior to that was, obviously we had a big run up. This was the big run up. It was sort of an unsustainable burst after the halving, which, just before the COVID in 2020. Okay, but if you look at, the lows of this range, if you like, again, low before liftoff in July. This one here, kind of, we had a big run up, and then obviously you got a low, so it's almost marked the exact low in between there. I'm not saying it's obviously a cycle low, but you can see my point is that, after July the 4th, you tend to get, downward movements into July the 4th, and then you get some nice movements thereafter. So I just thought that was an interesting point, and obviously, crypto and things is correlated with traditional markets, as we know. So, wouldn't be surprised to see, the prices coming down into the 4th of July, all the way back to 2018. Look, 4th of July, all, bottom before you obviously got them big collapse from 6,000 all the way down to 3.5. So, but again, you can see it's in or around the low. 2019, a low point, if you like, in the middle of those peaks. Low point of the, after COVID, lows of the range. So, I mean, you get the idea, guys. It's not perfect, but it's quite interesting to look at that side of thing. And more importantly, guys, I wanted to show you the weekly time frame. And you can see on here, if you draw on a logarithmic scale again, if you draw the peaks from, so you've got, the last two, the 65 and the 69,000 peaks here. If you draw those, obviously you project those out, and then you obviously draw the peaks to the recent all-time high, and you can see quite clearly that you've got like a range here. So and we are stuck between that range. So is there any is there any sort of surprise that we're actually inside that range? Probably not. So let's have a quick look. Let's have a look into there. Okay, so you can see we dipped out of the range slightly, but again, immediate sort of huge reaction to dipping below that, and obviously pumped straight back into the range. So it's interesting to see that we've got this big consolidation range area here. You've got, if we see where the end of the year is, so 2026, we are running out of time in terms of the cycle here. So you've got about 6 months left. But if you look at previous cycles, you know, 6 months is plenty of time. In 2017, you know, the price virtually 10x'd in this same sort of 6 month period. So, you know, it can be done. You know, we can see surprising moves. I'm sure that we will. I've not given up on the cycle yet. I think that we've got explosive moves incoming. I think a lot of people are taking more of a bearish view and actually starting to be a little bit more on the conservative side with their forecasting and things. But, you know, just for your own sake, guys, just look back through and have a look at, you know, the last 6 months runs of the bullish cycle and look at the price movements. Okay, just project those out from where we are now. And you'll get a good indication of where you think, you know, where price is going to end up. I've been saying a long time between 180 and 320,000. Ran things through artificial intelligence, and that came up with a price forecast of around about 250,000. So I think, guys, if we get close to the 250,000, obviously keep your eye on the things like the pi cycle top indicator. Yeah. So what's the worst case scenario on, you know, the lowest I think that it'll go? And you can see I've drawn a couple of fibs levels on the top here. So one measuring the peak to the base, which gives us a projection down to, you know, I'm actually, this M here is the one I'm, you know, the more recent M is the one I'm looking at, because obviously we've come back up, we're retesting the neckline of that. So the move from this point is the peak to the base, you know, and the measured move from 1 to 1, obviously from 1 to 2 is the measured move from that one. And the bigger M, if you like, the bigger sort of topping pattern from the top to the base there, the 1.618 actually lines up quite well with that. So with this, you know, with this support area here. So if we do come all the way down and we sort of worst case scenarios, we come down, we start bouncing along, we could start to bounce along and then see like a wick down and then, you know, a huge rejection afterwards, a huge sort of bounce afterwards rather. So if we see something like this where we, you know, we do actually come down, then we, you know, we bounce along for a bit and then see, you know, you know, something like that, which I think actually that's probably more likely. Obviously, you know, at the moment, currently, you know, with price as it is here, you know, there's every chance that, in actual fact, we could see, hang on one sec, we could actually see, you know, price break out, come back down and then take off. So you get, you know, similar price to where we are now around the sort of 4th of July. We could see that, and that's what the price is suggesting now as it stands as it is. But there's just a couple of things, you know, that sort of sending out some warning signs for me. I'll just pop a couple of indicators on here, guys. If we look at the moving averages, we can see on the daily. So got to bounce the blue line there is actually the 100 exponential moving average. Okay, so that's, you know, a huge bounce from the exponential moving average. If you go on a 4 hour, back to the daily, it's quite interesting to see that the green is the 21 EMA. So you can see price, you know, when it's come up, it's actually reclaimed those daily levels, but also above the 21 EMA on the daily as well, which is another sign of strength there. So, you know, we've got that support going on. If you go to a 4 hour, however, you know, you can see that it's sort of squashed between, you know, the 200 EMA and 200 SMA. So the two orange lines, 200 EMA and SMA, you can see it's bouncing between there. So we could still get rejection. Obviously, the 200 EMAs, SMAs are sort of battling it out at the moment. So, you know, it'd be interesting to see which direction we get from the next move. If I just going to show you, this is an indicator that I've built myself. It's a custom indicator. Starting to just tip over a little bit at the top there. Volumes, you know, dying off slightly, and the price is, you know, it is starting to just curl over a little bit. Not too worried about that at the moment. You have got the RSI has crossed below the moving average, so, you know, a little bit concerning. Although the volume is still picking up. So this is a 4 hour time frame. We are 2 hours and 20 minutes into there, and there's 60% more volume coming into this candle than there was the last candle. So, you know, that is actually looking like it's still got signs of strength there. You know, the bullish momentum isn't wearing off, which is really nice. Have a look at the Ichimoku cloud. The only thing that I'd say about this one is if we look at, so baseline has crossed above, so that's looking really good. So I'll just show you on there what that is. So you've got conversion line is in blue, okay, and you got the the red line is the baseline. Okay, so you've got the baseline coming down and the conversion line's crossed up above there. But we are coming into the cloud now, and you can see that it's rejecting from the cloud rather than breaking through it. So, you know, that's on a 4 hour. Let's have a look at the daily. So daily is on the Ichimoku cloud. We've come up against the, you know, coming up to the top end of the cloud itself. We've not actually broken out convincingly. So whilst it's within the cloud, it's a sign of indecision. We've not broken out from it yet. And you can also see that on this time frame on a daily is that the base, let's go back to this one again so I can show you. So you've got the conversion line is the blue line. Okay, and the conversion line on an uptrend should be above the red baseline. So as you can see here, got a nice uptrend, and obviously you've got the blue conversion line above the red baseline, but now you've got the conversion line which has come below the baseline. So, you know, this is signifying that until that changes, then obviously there's still a sign of indecision, potential move to the downside. Nothing's guaranteed. It can be negated if there's a good strong move. Then obviously, you know, it breaks out and things. Then, you know, we'll have broken through the cloud and, you know, and broken out, and that will change things again. But just going back to the zone of interest down the bottom here, guys, where we've got 93 to 90, so it's 94 to say 95 and a half. If I just put the bull market support band on here, so on a weekly time frame, you can see that the the bull market support band is lining up with this area down the bottom here as well. So if we do get rejections down into the early part of July, then obviously, you know, that is why, you know, it's another sort of sign that there's a potential interest there. So yeah, that's what to watch out for, guys. And thank you very much for listening, for being part of the group and things. Thank you to those that are using GBot at the moment. I'm having some great fun with that. That's it's been interesting, interesting to say the least. So, you know, thank you very much for your interest and for participating. So all the best, guys. Thanks very much. Take care, and I'll speak to you again soon.